My biggest struggle is that I can follow any smart money video with perfect comprehension, but when I move to a naked chart to perform the same analysis myself, I'm lost and wrong. This has been going on for 2 years and I'm close to quitting. I don't know you, David, but I can tell you one thing. The only way you fail on anything in life is when you stop trying. So if you quit right now, that means that you're missing a tremendous opportunity to be able to be successful maybe in 1, 2, 3 years, doesn't matter. And since you want to be able to analyze the charts naked like you like, I will give you a hand, and in this video I'm going to explain you step by step a little bit of backtesting on how to use this strategy based on the knowledge I already provided here on YouTube. So let's get into it. So first you need to ask yourself, what is the lowest time frame you will ever go to execute or confirm a trade? If you're used to trade the 1 minute chart, then we'll start from the 1 minute chart and go to higher time frames until we find at least 3 or 4 different degrees of structures that we will use to create a story to frame our potential trading opportunity. So step number 1 is the higher time frame bias. Now for this exercise, I'll select a random pair so I can do backtesting. And the pair is the 19, which is Euro GBP. So let's go to Euro GBP right now. I'll select the 1 minute chart, shrink everything, and I'll move to a random old date. So I don't know what happened to the right. And we are starting right here. Now, from the 1 minute chart, I will use my path tool to identify all the market structures. If we zoom out a little bit, we can clearly see that we are on a major downtrend in this example. Price has been pushing lower, lower lows, lower highs, lower lows, lower highs, lower low, lower high, lower low, lower high, lower low, and now higher high. Then inside of this leg up, we have an uptrend, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and now price is potentially making a higher low. This is going to be from a lower degree of structure. And what else do we see here? We can identify another degree of structure right here. We have a downtrend, lower low, lower high, lower low, lower high, lower low, lower high, boom, 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 lower low, lower high, and now lower low, and now potentially building a lower high. So right here, we have 3 different degrees of structures. Using the 4-question system, I will create a story for each one of these, starting from the higher time frame, which is our yellow. So the yellow is currently a bullish structure because the most recent breakout market structure happened to the upside. Price is currently sitting at a discount level for the yellow range from this low to this high. This is discount and coming from premium. Now, what is the target or purpose of this bullish breakout market structure, this new uptrend? To answer this question, we will zoom out a little bit and go to perhaps a higher time frame to see where is this yellow uptrend starting from. We can see here price made an equal low with this low here. So my guess based on this and understanding the liquidity is that the purpose of this up move was only to induce buyers coming from a quote-unquote support level. So I think that price is likely going to go lower and take out the liquidity below these equal lows. If this wasn't the case, if price was coming and breaking the structure, for example, from anywhere inside this level, then I would think otherwise. I wouldn't think that price will continue on lower, but rather start an uptrend. But since it's coming from building equal lows, inducing buyers into the markets, these buyers are placing a stop loss below this level. So the most logical move now that they have broken the structure here, inducing more buyers, is that they will go after their stop losses, which are sitting below these lows. So the target for this uptrend was to induce buyers by breaking the last lower high, and it was met. That means that our expectation, remember the expectation is what is the next logical move, is to reverse breaking the equal lows. Now, essentially for the yellow, what we are saying is that price is likely going to move lower just like that. Now, this could happen in 2 different ways. This could happen just like this by continuing lower, or price coming back to a premium level and then going lower. Now, zooming in a little bit more, we have the white trend. So we are going to build the story for the white. The white is currently bullish Now, where is price now and where is it coming from? The current range for white is from this low to this high, and price is currently at discount, coming from premium. Now, following the higher time frame bias, the purpose for this uptrend was to break the last lower high on yellow, and it was met. So that means that our expectation for the white is to continue going lower, to reverse. Now, as for the orange one that we have here, this gets a little bit tricky, because the purpose for this lower time frame downtrend that we are seeing here is either to continue going lower, breaking this low, or to mitigate this bullish level by pushing higher and then going lower. Remember that we have two biases. Based on those two expectations, we are going to write that the orange is bearish. Currently, the orange range is from this high to this low, because this was the most recent break of market structure, and price is currently sitting at equilibrium coming from discount. Coming from premium. The target could be either A, mitigate bullish POI, or B, break the equal lows. So the expectation based on the targets are price respects the last lower high and goes lower, or price initiates an uptrend to mitigate the bearish POI. This is essentially what we think might happen. Now, when we have an expectation, obviously it's because we are trying to capture the momentum, the impulsive waves in the markets. But not always our expectation is going to be right, and we need to adapt to the market and basically try to follow its order flow, what the market is telling us to do. As of now, we just created equal lows here, so it makes sense. This supports the idea of price breaking higher to induce buyers due to the fact that we are coming from a quote-unquote support level. In fact, we can also add that here we have a trend line inducing sellers. So there is people selling here and people buying from here. So it will be a great idea for price to push higher, induce buyers, and then quickly reverse. That makes a lot of sense. Now, step number 2 is selecting the points of interest based on our bias. Here we have a bullish point of interest. If you're enjoying this masterpiece, I would really appreciate if you like and subscribe. It's free and it really helps the channel. And if you want to check out my mentorship where we trade live every day, you can check the link in the description, in which price creates an uptrend to then go lower. And here we have the bearish point of interest where price could initiate a downtrend. Why is this our bearish point of interest? Because we have a distribution, a break of market structure, a test as the last point of support. So I'm going to mark both the last point of supply, and the main distribution here as main point of interests. So let's see if we have any break of market structure here to the upside. Price might go higher and we might take a trade. Let's see. Price seems to be ranging right here. We have equal lows and equal highs on this 1 minute chart. Okay, we are taking the liquidity above the highs. Remember that price could, I forgot to mark this point of interest, price could simply go lower from here. So if we have any bearish break of market structure, we could look for a short. Okay, we are still in this bullish uptrend. We made higher high, higher low, and higher high of a lower degree. Okay, we are breaking the orange structure. That means that price wants to go a little bit higher before pushing lower. We don't know how much higher it might go. It might go lower from here because they are grabbing internal liquidity. So what I'm going to do, I'll mark my last higher low as a bullish point of interest. If I have a confirmation here, which is going to be the step number 3, look for a confirmation from your point of interest to take the trade. If we have a bullish break of market structure from here, we can take a trade. By the way, I'm not using volume. Volume is one of my strongest confluences because it gives you a great deal of information if Smart is accumulating orders or distributing, and it also provides information if they are absorbing or they are about to expand higher or lower. You know that I keep that for my mentorship because it took a lot of time to learn and master it. So it's something that I keep only for my mentorship. However, you can still learn it from my free YouTube live sessions that I posted and my free recording from live trading as well, where I explain my full strategy while I'm taking the trades. But for now, let's keep it simple with structure and liquidity using the strategy that I taught you here on YouTube. We want to see a bullish reaction from here potentially or from down here. Why down here? Because we are creating another uptrend on orange. This is a new orange higher high. We have a bullish break of market structure. and we are at premium. So if price wishes to continue going higher, it will be from a discount level, okay? So let's see what happens. Let's move candle by candle. We are about to hit that bullish point of interest. It seems like, yeah, they want to break lower. We have a bearish break on red now. Now, if we have a bearish break on red, that means that price is initiating a retracement or a continuation lower. What we can do, aiming for these lows as internal liquidity now, to continue going lower. If price gives me an entry up here, I'm willing to take a short. So I'll set my limits around these levels. You can see if we zoom in a little bit more, we have consolidation, uptrust, break on market structure, consolidation, and then continuation lower. So this will be my last point of supply of a lower degree of structure right here. So I'm going to set my sell limits around this level, stop loss right there. If price gets to this level first, then I'm going to cancel the sell limits. Well, yeah, it hit my take profit before hitting my entry, so I'm going to cancel it for now. Now price is grabbing that internal liquidity that we talked about, and we are about to hit a bullish point of interest. Now price could either make another leg up and then go lower, or simply go lower just like that. Ideally, it doesn't go lower just like that, because otherwise I'll be missing that trade. So let's see what happens. It seems like it's about to go lower. Okay, we have a bullish change of character here, or rather not change of character, break on market structure, and now we are testing this order block coming from here. So if price breaks again higher, then I'm going to take a long to fill this imbalance, or otherwise I will just wait for another opportunity. And it got broken. Now the lowest low is down here, but we are definitely going for those equal lows now. How to get into this trade? Well, now we mark the points of interest again. We have the last lower high here, and from the higher time frame, the orange one is up here. So essentially the red one is still on a downtrend, making lower lows, lower highs, but the orange is now producing a lower low, about to produce a lower low actually, and price is at a discount level. So since we know for sure, or there is a very high probability that price is going to break these lows, I'm going to attempt to take a short from the last lower high here of the red one. And if it doesn't work, because price might grab some liquidity before pushing lower, price could either test and go lower, or grab some liquidity and go lower. If I get stopped on this one, then I'm going to look for another trading opportunity. We are breaking the equal lows. Let's see. So our buy was correct. Price grabbed a little bit of liquidity and went lower. Unfortunately, we didn't have the entry. Now it's riskier to take this type of short, because price is coming from grabbing external liquidity, the equal lows, and now the probabilities of price pushing higher and grabbing internal liquidity again are higher. So what I'm going to do, I'm still going to attempt to take this trade, but lower the risk in case I'm wrong about this bias. So for this trade, I'm going to risk, assuming I took the trade, only 0.5% to make another leg down, unless price makes a lower low right now, and well, I missed that trading opportunity. Okay, I had the entry. Let's see what happens now. Okay, it was a good reaction so far. We are currently at 1.75 RRs, and we are sitting at an uptrend here. On the lower time frame, we have a higher high, higher low, higher high. So what I'm going to do, I'm going to take 75% off here of this trade and let it ride lower. And I will move my stop loss at break even. And I will let this ride until we go underneath these lows here, if they want to go lower like that. So I'm going to extend my take profit. Well, here 7.68 hours is pretty nice. And we have this low as internal liquidity, the next low below this one. So let's see what happens. Okay, I got stopped at break even right there. Let's continue watching. Now price could initiate an uptrend to grab internal liquidity again. Now that internal liquidity could either be this one on the lower time frame and then go lower, or it could grab this liquidity again and then go lower. So I'm going to be open for any of those options. For now, we are still within the red downtrend, so price could go lower again. However, look what happened. Price came from the last lower high of red, pushed lower, failed, and now is pushing higher. They grabbed liquidity and now they are pushing higher. That means that this high is probably going to be broken very soon. So what I'm going to do now, I'm going to attempt to take a long from, let's say, here, stop loss down there, aiming for some of these highs as internal liquidity. Okay, we got the entry. I don't like that price action at all. Okay, Okay, let's see what happens. Seems like they are reaccumulating. They induce buyers by making a higher high, then they took the buyers out by making a lower low, and price now should be able to push higher, unless I'm wrong, obviously. Okay, there we go. Now price is at how much hours? 1.27. What I'm going to do, because I'm still bearish on the higher time frame. Remember that the main bias is to go below these lows. I'm going to take 50% off right here at 1.27, and I'll move my stop loss at break even again. Boom. Let's see what happens. I will hold this trade until it grabs more liquidity, probably here, because this retracement occurred after they broke all of this as an order block. So this is a mitigation or the last point of supply. So somewhere around here is where my final TP will be. Actually, this is only 2 hours. Oh, 3 hours. Okay, makes sense. Right there. Let's see what happens. Okay, and TP hit. Perfect. So with this trade we made... Oh, I forgot to add the previous trade as well. So I'm going to Control C now. But first we have 1.27, so 0.6 in profits plus 1.5. So we have 2.13. 2.13, and now we're going to Control C to see the other here. Okay, so we took 50% or 75% off here, and this level is 1.86 off a 0.5% risk.
So we have 0.5 risk times 1.86, and I'll take 75% of this times 0.75, so give us 0.69, let's say 0.7.
Plus 2.13, so we are in profit 2.83 hours. So I will take one more trade for this using the same bias. Now, if price gives me an opportunity to take a short from around these levels, I'm going to still take a short, but I'm not discarding the fact that price could go higher than this. Now the red is bullish, so they might want to push higher. My points of interest are this one, and this one for the shorts, all of this range. So in any of these two levels, if there is an opportunity to go short or long, I'll take it. Now the red has created a higher high, higher low, higher high. We have a liquidity graph here, but price failed to go higher. So now we are probably going to go after this liquidity here, unless they want to make another uptrust. Okay, they are making another uptrust. If I see a break on market structure, I will probably take a short. Otherwise, I will just keep watching. Okay, so we have a higher high, higher low, higher high, higher low, higher high. Now we left equal lows behind, but now we have a trend line. So it makes sense for price to induce sellers now that we are at a premium level from the higher time frame, and then go higher. So I'm going to take a risky trade here. I'm going to attempt this short. We have a distribution, a break, a test with one single candle, and then now price breaking lower again. So I'm going to take a very risky trade. So I'm going to risk only 0.5% for this one, aiming to take the liquidity below these equal lows. Okay, we got in right there. Let's see if we have another nice move down or not. It seems like, yeah, they are going to take me out. Okay, yeah, I got out. So minus 0.5. We made 2.83 minus 0.5, so 2.33. And this happened throughout one single day of trading, where we took all of these opportunities in a time period of almost 5 hours. Continue learning how to apply my 4-question system on this video to check out how to apply it live, obtaining the higher time frame analysis on a free call I did for the public Discord.